All right. Hello, everyone. Welcome to episode 26 of Going Live with Good Soil here. Matt did a great job with Yashu last week while I was out. And this week I'm actually on vacation again with family and in my hotel room on a laptop. Hopefully, the audio quality isn't too bad. But we're on YouTube Live and Twitter Spaces at the same time as usual. And so the people on Spaces that couldn't see, there's a disclosure that none of this is financial advice. This is just our own opinions on things. We'll talk about the markets, Tesla, Rocket Lab. Take a lot of Q&A and so forth as we usually do. So, Matt, how are you doing today?
Good, thanks. Yeah, it's been nice to see markets recover a little bit. But yeah, family had a really nice Christmas. How was your Christmas?
It was great. Yeah, we had a great Christmas. We got a little skiing in a few days before Christmas, and that's why I wasn't available last week. This week, we have like a mini family reunion on my one side of my family, and it's in San Diego. And we're supposed to fly down yesterday. It's like an hour flight, or not that long from San Francisco, but we got to the airport and learned the flight was canceled. So there's like 10 of us Pepper's family members supposed to be on the same flight. And we all had to scramble, and we decided to drive our Teslas down to San Diego yesterday.
Jeez.
So it was like a 11 or 12 hour trip with all the stops, and my kids wanted to get food or snacks and go to the bathroom. So it was cool to do that last second, but it's a long drive to do in one day with kids, but
Yeah, especially when you weren't planning on it to begin with. How long
yeah,
were you at the
no.
airport before you had to change plans?
Well, I realized as soon as we heard the flight was canceled that this is probably what we need to do, and it took another half hour, another hour before it kind of set in with the rest of my family that hey, if we want to get down to continue to do our vacation, we can wait till tomorrow if there's a flight they can put us on, which could also get canceled, or we could just start driving down now and take control of our own destiny. So that's what we did, and yeah, so it took us about an hour at the airport to figure that out, and we were in some line for customer service where they confirm that there's no other flights out there. So yeah, it was cool. Anyway, enough of my personal stuff. Hopefully enough time is going on where people joined. And so first off, I guess I haven't been following as closely. I have been following, but not like I normally do as closely everything. But the macro markets, I mean, we hit, the growth stocks sort of had a bit of a comeback last week in Christmas week, and yesterday and today kind of a mixed bag. What do you think is going on with the growth stocks? I mean, that's really we need to think of like the ARK flagship fund as like the index for what we play in, and their fund has kind of been up and down the last week or two. What do you think, Matt?
Yeah, it's hard. I mean, ARK has been really beat up. I mean, I think in a lot of ways we do kind of think of them as like the benchmark for, the sandbox of the different stocks that we play in. But they've had, like, even I think it was yesterday, Tesla was up a fair amount and they were down, I would say it was like 2% or something like that. They've certainly been beat. They've had a lot of kind of outflows that have probably triggered some selling in a lot of their stocks. But in general, I think we were talking about this a couple of weeks ago. I think how it seemed very likely that there was kind of cash just sitting on the sidelines for a while. There wasn't necessarily sector rotation when we saw this big drop off in prices across the board in growth stocks, earlier this month, kind of the beginning of December. So I think what's happened is, you've seen a little bit of kind of stability. I think maybe there's I don't want to say that the issues have gone away with kind of concerns around, COVID and inflation and all these macro things. But I think you're starting to see some of that kind of big pile of cash that had been sitting on the sidelines just slowly start to dip the toe back in. But what do you think is kind of going on that's leading to this recovery?
Yeah, I wouldn't be surprised if there's some of that. Like maybe people were locking in some long-term gains in some of these growth stocks end of the year, at the preferred capital gains rate that's still to be determined next year if the capital gains rate is going to go up for the highest earners. So there could have been a little bit of that, but I'm not sure that's a big influence. And then, yeah, the growth stocks, they've just been, with the change in monetary policy coming up, they've just been an unpopular investment choice for a lot of institutions. I would say the institutions are what drive the stock prices the most, I would say. Occasionally you have like an individual stock that, maybe is retail driven, but overall, the sandbox of these growth tech stocks. If you're talking about them almost as like an index, that's really driven by institutions, not some individual retail investors, in my opinion. So I just think they've lost favor to some degree, but I think it's sort of overcorrected, and hopefully we'll see a slow melt up again into next year. That's what we're kind of hoping. And long term, we're very on all the growth, innovative tech stocks, obviously, and day to day, month to month, anything can happen. So this could just be one of those month pullbacks, and then we're back off to the races soon, or we'll see. Next month could be another pullback. Even it's hard to say, but big picture, we're very bullish on it.
Yeah, it's a couple weeks ago, I think we went over the earnings estimate model for Tesla, and I think that was kind of helpful to in the backdrop of kind of like macro carnage and high amounts of uncertainty around what was going on with Fed policy and the Build Back Better plan and all these kind of uncertainties. It was really helpful to look at the operations of Tesla and say, okay, even with relatively conservative assumptions, there's a very strong backstop to the price. So yeah. I think when you get too wrapped up in the macro, it's very easy to either panic or kind of get away from your core thesis. And it's really important as an investor, I think, to kind of get back to the operations as much as possible. Of course, you need to stay abreast of developments in the macro markets, and there'll be times when it's prudent to make moves. But I think with where we are in this market, especially with Tesla, but I think also for a lot of the other growth companies that we play with, there's going to be a very strong operational, I guess, foundation in the next couple of years that's going to completely backstop the prices, we think, even if macro deteriorates.
Yeah, one really interesting, we'll get to the Rocket Lab warrants in a second, but one interesting anecdote with me and my kids, and we talk about Roblox a lot, is each got a few Roblox gift cards from different people, and for Christmas. This is the first time they got Roblox gift cards. I guess last Christmas it was like sold out or whatever. This Christmas, some family members and figured out how to get them and got them to them. And when their iPad time was started at, they get like 2 hours of iPad time on the weekends or whatever each day. And when it started, first thing they want to do, they want to spend all of their Robux, gift card money. And I think my youngest, who's 5, spent like $80 of US dollars in like 2 hours of Robux playing. And I'm like, wow, that's crazy. I thought he was gonna use it over like 6 months or 3 months or save it or something. Like, kids do with Halloween candy, but no, he just used it. He wanted to use it all right away. My oldest used like half of it, which was still like $30 or $40 or something. But that was like a big part of their Christmas this year. And if that's any kind of anecdote to other families that are getting Roblox gift cards, it's going to be it could be a nice surprise for the Q4 bookings, December bookings, Roblox, publishes later.
I was thinking that same thing. I mean, we saw, a big jump in the stock after Q3 earnings came out, but then it was, largely mitigated after the kind of November metrics came out. But December has very clearly been, one of the best performing months for them, just because you got all the kids off for extended holidays. So if there's I think it'll be very interesting to see what those numbers look like when
and this is just something normally, like, you and I haven't had a chance to talk privately much the last week or so, and this is the first time I brought this up to you this angle, but this is something like you and I would talk about and think about, like, maybe there's a good short-term options play for Roblox, if there's going to be some upside surprise that the street can't quite anticipate with these bookings that'll come in December. But, we have to talk about that. But it's just an interesting idea, like, hey, Roblox, if it comes down, I think it's down a little bit today. If it comes down again, maybe some like short-term options could look interesting to buy for their next, for quarterly 4 reporting. If they don't publish it before then it'll be published then, how much bookings they've taken in December, for example.
Yeah, I think the really interesting thing too is that the bookings is a lot of times different than the actual revenue that they book. So if there's let's say you buy a $100 gift card for your kids, and they amortize that over, say, 6 months, or I think it's actually closer to 12 months. I forget the exact time.
Yeah.
But then, it'd be, let's just say it's $10 a month that they recognize that revenue over. But if you're getting this kind of extended consumption, or like a burst of consumption among players, during the holidays, then you could see a real acceleration of converting the bookings into revenue, and probably, a spike in bookings as well to kind of backstop next year's, or to grow next year's revenue. So I think that combination is certainly, it's possible to see that play out. So yeah, maybe once we have some time to settle down, it probably would be good to talk about some options plays. So I think that it's probably worth looking at prices and seeing if there's something there.
Yeah, we'll have to look at that. Yeah, later in the week or whatnot, or later today if I get a chance. I'll look at some and we can chat about it. So anyway, Rocket Lab, the warrants. That was sort of a surprise. It just came in out of nowhere. I felt like last week, and we're like, oh man, it really hurt our chances of getting a huge return on those long-term warrants. And it was a little worrying, because we're new to warrants. Obviously, we've talked about that, and we've advised other people warrants might not be a good idea because we don't even understand them completely ourselves. It's our first time kind of diving into them with our fund, and we had some of those Rocket Lab warrants. And what do you think, Matt? What were you looked at a little closer than I, and you want to talk about it a little bit?
Yeah. So I was also surprised. I didn't think they would, call those back as early as they did. So yeah, it was a little concerning. I think it was like a 25% drop in the price of the warrants overnight, something pretty drastic like that. They had been trading well north of $4 per warrant. As a reminder, they had like an $11.50 strike price, with the stock trading around $12. That seemed like a good amount of kind of option value. But the thing to keep in mind, so for anyone who is holding those warrants, I believe they expire in January 22nd. Double check the date on that, because I haven't looked at it since last week. But essentially, there's a conversion ratio in the warrant agreement, which essentially states that if it's more than 60 months until the expiration, which of course is the case now, there's a kind of a set conversion ratio based on a weighted average price for like a 10-day period after the announcement. So there's a pretty good backstop in the price of the warrants right now. It's around, what is it trading, like 340, somewhere in that neighborhood. With the conversion ratio, that works out to be right around $12 per share. So I think we won't see a whole lot more movement in the price of the warrants, I think, unless there's some drastic move in the underlying stock price in the next couple days. But for anyone who does hold these, you do need to either sell them before that date, or request that your broker redeem them. You can either exercise them, by paying that $11.50 per warrant, or you can convert them into shares. So just if anyone listening is kind of new to this territory, similar to the way we were, just make sure that you are looking at all those options and are choosing the one that's best for you, and actually executing those before that expiry comes up.
Yeah, I think if you don't, it turns into like 10 cents, right? It turns into like 10 cents. So you're gonna like lose all your money if you don't do anything. Yeah, you got to do something.
There's a cash conversion, because Rocket Lab wants to use those as a source of cash, to fund a lot of the development that they've got going on for Neutron and other things. So they don't want to be paying you 10 cents or even like $1, whatever the fair market price is, $3 for each warrant. They want to get the cash in the door. So if you don't exercise anything, my understanding is there's a 10 cent payment that they'll essentially make you if you don't either sell or exercise with your broker before then. So just make sure, if anyone is holding those, that you understand the different choices, and you act relatively soon.
Yeah. The warrants are always risky business in my mind. It's hard to understand the complete risks involved, and when there's something like this going on, like if you don't act, you basically lose the entire thing. Whereas options, I feel like you're exchange traded. If you don't act, you're almost always I think maybe it used to be the case they would become worthless, but I think long ago the brokers pretty much put in these auto policies where they automatically exercise or assign you the options or sell them for you at the closing date or expiration date to give you the money.
Yeah, it was kind of it was a good learning experience for us. I think, with a relatively small amount of capital in the fund to have
Yeah,
exposure to warrants, because we saw, when Rocket Lab spiked up to $20. I mean, if we had been holding options with an $11.50 strike price, you would have seen like a huge increase in the value.
yeah,
But the warrants actually didn't have nearly the kind of delta dollar exposure that the options do. Part of that
yeah,
is because they are dilutive to the existing shares outstanding. Part of it is because the company has the right to exercise them rather than you as the warrant holder. So there's kind of an asymmetry in control there. And then I think the last thing is there's essentially a cap around $18 per share, which has a fixed conversion ratio. So if the stock was at like $50, the warrants wouldn't convert up to that $40 of upside. So
yeah,
it was a good experience, I think, to kind of go through and see how warrants behave very differently than options, but
yeah,
still ended up doing pretty well in the trade, I think, overall. And Rocket Lab
yeah.
still up quite a bit from when we first entered.
Yeah, yeah. We still believe in it, medium, long term, especially. So, Peter Beck, by the way, did several interviews in the last week or so that got published like all at the same time about the neutron. I listened to one and a half of them. I've been away. I still have it on my list to listen to another couple. But the one thing that really stuck out to me that was impressive was that he understood, or the point that he made, that and designing and building a larger rocket is way easier than a small rocket. It seems like converse to what I would think, but the point that how he substantiated it was that, like, hey, if you have a small rocket like Electron, every gram really matters. So whether or not they put an extra actuator here or there might weigh 20 grams, they have to really consider that decision, because it'll significantly decrease the payload they can send up to space if they put it on, for example. But with the bigger
Mhm.
rocket, they can put that, a few grams here and there don't matter. So if they want to just make the rocket better with some small pieces here and there, they can easily decide to put those on the rocket without worrying about disrupting the payload they can send us to low Earth orbit as much. I mean, that was one interesting takeaway I had, is his understanding of that kind of, it felt like a first principles type of, statement he was making.
Mhm.
Big rockets are easier to design than small rockets. This is why. But well, that was my main thing that I remembered. But what about you, Matt? Did you listen to any of them, or what did you think?
Yeah, there was one he did with Everyday Astronaut with Tim Dodd, which was really great. Yeah, it actually, that comment that you just said reminded me of something I think Elon said in a recent interview also, where he was talking about that exact same concept. He's saying, like the avionics you need on a small, call it Electron size or Falcon 1 size rocket is like exactly the same whether you're doing that or like a Starship.
Mm-hmm.
So you're,
Mm-hmm.
as a percentage of the total mass, yeah, obviously it helps you a lot to have a larger launch vehicle. So it's kind of interesting to see the meeting of minds between Elon and Peter Beck there.
Yeah.
But yeah, I thought the interview, at least the one that I saw, was really interesting. I mean, there was not a whole lot of kind of new information, at least for me. I mean, Tim Dodd asked him about kind of the choice for methane, and he was saying like it's a cheaper fuel, but that wasn't really the prime reason that they chose it. Once you factor in all the like different treatments and like the ground equipment that you need, it's actually not that much cheaper. But the real benefit is that it doesn't have like the soot buildup. So it was really focused on reusability. The
Mm-hmm.
thing that really stood out to me was he talked about the need. He wanted everything to be designed with the capability to turn around and relaunch within 24 hours. So
Mm.
they were making design criteria based on that. So he said that kind of ruled out, um, you know, launching and landing in the sea, because then you've got to, reship, back to like the launch site, and that's going to take more than a day. And how
Yeah.
expensive it is to like have maritime operations
That's
teams,
another
and,
thing that
and
was
so like you
interesting.
avoid all
Yeah.
that. And then the last interesting thing I thought was we was talking about the rocket diameters kind of being determined by the clearance on overpasses on the interstate system. He's like, that's
Mhm.
kind of a crazy limiting factor to introduce into orbital launches. So if you just have the manufacturing facility at the launch site and then you return the vehicle to the launch site, then you get rid of this artificial constraint, which most other launch operators are beholden to. So just his clarity of thought, I thought was really interesting, and he made some kind of great points about designing really from first principles, like you were saying.
Yeah, I mean, I can't help but think like him and Elon have some kind of like between the lines digs at each other at some of these points they make, because he was saying, like, he emphasized a few times the maritime point about like, hey, you ever see how expensive it is to operate one of those ships? Like, this is way too costly. I'm not sending one of those big ships or barges around. Like, it was almost like he was taking a dig at the way SpaceX does it with their barges or whatever, and it's not wise from a cost perspective or something. And then Peter Beck retweeted or something this stat about 2021, the number of successful launches per rocket or something into lower Earth orbit, and Electron, I think it was like some Chinese rocket was number to the top, then Falcon 9, and then like Electron, it was like 4 out of 5 successful launches or something for 2021. I think Falcon 9 was like 30 out of 30 or so. I don't remember exact stat, but it was like this chart. And then Elon, it was one of the things Elon commented on, and it was after, I think it was after Peter Beck retweeted it, and Elon commented like, "That's not important. Only thing that's important is kilograms sent to space or something."
Yeah.
And so I was wondering if that was like read between the lines dig at like, why is Peter Beck even retweeting this? The only thing important is this. I don't know. That's just my own. Like they're kind of battling at a higher level.
There's a little bit of that, but it's certainly more respectable than like what Bezos and Musk are doing. I think Beck and Musk do have more respect for each other than Bezos and Musk. But like they clearly are doing some, I think, respectful digs. Like Peter Beck did like the denting the stainless steel on his like neutron presentation, which I thought was kind of dumb, honestly. I was like, okay, I guess the neutron will be better at side impacts if it crashes, I-beam crashes into it somehow from the sky,
or some space debris hits it, maybe. I don't know. Yeah,
I guess, but So, but I thought it was a little bit silly. But I think like everything, every rocket. This was something else from that interview. Peter Beck was saying something to the effect of, everything's just a trade-off. So if you have expensive maritime operations, then you'll be able to deliver more mass to orbit because you don't need as much fuel for the return journey, so you can kind of expend more to avoid to kind of increase the delta V instead of spending that fuel to get back to your launch site. So like that's a trade-off. But he's also saying in that interview that they're not trying to optimize for mass to orbit, which clearly, Starship's going to dominate that. And so it doesn't really even make sense for them to compete there. I think for what Elon is trying to do, and, colonizing Mars and all that, like absolutely that's the right metric. But what Peter Beck wants to do is be the low cost provider with very quick turnaround time to a very customer specific orbit. So that's the way that they've designed this vehicle. And I think that's the market that they're trying to go after. That is, I think, not that SpaceX won't compete with it, but I think there's room for Neutron to really compete and do well there. I saw a great video from a YouTube channel I hadn't seen that kind of laid this out really well. I think Stan Marge actually tweeted it. So I'll have to find it and kind of retweet. Actually, I think I did retweet it a week or two ago, but it makes a really compelling case for kind of the different business objectives that each one's trying to achieve and how there really is room for both to succeed.
Yeah, cool. Yeah, so for anyone who's joined late, the spaces or whatever, this is being recorded on our YouTube channel for Good Soil Investment, and you can watch it after we're done if you missed the beginning or whatever, or want to listen to it from the beginning. So we'll go on to, I guess the next thing is Elon and Tesla. Speaking of interviews, Elon I think there's going to be an interview released by Lex Fridman today of him interviewing Elon. That's my suspicion. I think most people suspect that. So I just checked. It hasn't been released yet. I think he said something it was going to be released this morning. So hopefully it'll be released soon. I'm looking forward to that. More technicals on self-driving and the technology around that, I'm sure will be discussed, as well as many other things. But it could be, I wonder if it's going to be a really long interview, because Lex does some pretty long interviews. I think he had one that was like 5 hours long not long ago with like some mRNA specialist or something. So Usually they're like 2 hours, but still that's still pretty long. But I'm not sure how long this one will be. Have you heard anything about that, Matt?
No, he said he was going to post it at 11 Central, which was, about an hour ago. So yeah, I was just
Yeah, I
seeing
haven't
right
seen it.
now if I could find it. But yeah, I'm definitely looking forward to it.
Yeah.
I was actually listening to one. He had a really great one with Ray Dalio, which posted a couple days ago. I'd
I
recommend
actually
people
did
check
listen
that
to
one out
that.
too.
I did listen. That was the one thing I listened to on my drive down yesterday to San Diego. Is at one point my kids were listening to some kids audio book, and we put on to try to quiet them down. And then I put in my AirPods and listened to the Ray Dalio interview with Lex Fridman. That was good. Yeah, that was interesting. So Lex has been on a roll. He's had a lot of great interviews. So hopefully he got the Elon one he's been waiting for. The second, I think this will be like the second or third time he's interviewed Elon. So he always asks good questions. So yeah, we'll wait for that. And the I mean, going on Tesla, the Q4 delivery estimates. I know we both follow Troy Tesla closely, and he's been kind of inching it up. What are your thoughts on that, Matt?
Yeah, I was kind of surprised, with some of the, it's seeming more likely than not that there are some kind of supply constraints in Shanghai right now, kind of limiting production. But even in taking all that into account, it seems like, Troy Tesla's estimates and I think the general community sentiment are that the deliveries are going to surprise. So I think Troy's at like 289,000, something like that right now, which is certainly more than I was expecting. I was kind of thinking more like, I don't know, 270, 275, somewhere in that neighborhood. So yeah, to get, close to 290 and, if there's a good chance they could even get to 300 if they're, then get to 290. So
Yeah.
that would be phenomenal. Obviously, it
Yeah.
kind of remains to be seen.
Yeah.
They're not doing a kind of optimizing for quantity of deliveries this quarter. So that's an important thing to keep in mind. We should see some amount of inventory buildup this quarter for that reason.
Yeah.
So that'll dampen, the delivery number a little bit, but I think it's the right move for them in general. I don't know. Were you kind of surprised to see sentiment changing like that and estimates coming up?
Yeah, I was a little bit surprised. I thought we were going to be, I thought we were getting set up for kind of a lower delivery number than, we were at one point. I think Rob Maurer even mentioned like 300,000. It seemed to be an estimate like earlier in the quarter. He was thinking, oh, maybe we'll be at 300,000. So I was like real excited. And, he does a lot of analysis on this. And I also know that we're all Tesla bulls and we think like pie in the sky about Tesla naturally and such. So I was like, I took it with a grain of salt. And then it seemed like, okay, maybe the production numbers from China for November weren't quite as strong as a lot of people were assuming. That was like the real, takedown. Okay, 300,000 is off the table. Maybe 270 or 260,000 is best case, and now it's kind of creeping back up. I guess, Troy has really been focused on monitoring the situation. He's usually within 3% error, and he's getting closer and closer to 300,000. He's not quite there, but he's getting there. And so I think it still will be a strong print. And I think they are doing a lot of deliveries end of quarter now. A lot less people are delaying their deliveries than they otherwise would have if the Build Back Better had passed, because Build Back Better didn't pass. And so that uncertainty that, there's more certainty, like, hey, I'm not going to get my rebate if I wait till January 1st. So I might as well just take it now, So, yeah, so I think that has probably helped marginally here in the U.S. Maybe several thousand, maybe anywhere from 5 to 20,000. I don't know. That's my guess. Deliveries in the end of quarter here in the U.S. But yeah, I saw a number of trucks driving yesterday. Even though I'm the same direction as the trucks, I even had a few trucks that were holding Teslas. So there's a lot of movement going on. One of them had like Model S's. So it was interesting to see that too. So. Yeah, it could be a nice, strong Q4 delivery print. And yeah, this is the thing we talk about with the growth tech stocks. At some point, if it's a good growth tech stock, it turns into a value stock. And it sort of feels like we're in that kind of flippening of Tesla where, you can kind of see the value starting to come into place here with high margins and large revenues growing, 20% quarter over quarter, not just like year over year, one quarter to the next quarter, the revenues are up like what is it, 15 or 20% from 245,000, 290,000 maybe.
Yeah.
That's pretty significant. That's a real game changer when they're profitable by as much as they are with the margins they have. That's like kind of reminds me of Apple in the heyday of when that stock was really on a tear, like in the, you know, maybe it was like 8 years ago or something like that, when the iPhones were really ramping up and so forth. So we'll see. We'll see what the stock does in 2022, but I'm excited.
Yeah, it's really interesting. I mean, we've got this ASP increase coming through this quarter. We've got, probably lower delivery costs because they're not doing this huge end of quarter rush. So I think it's going to be a really strong quarter for margins. I mean, the more I was kind of thinking about weighing all the different, pros and cons on margins, I'm starting to think that the gross margin increases that we were, modeling out 2 weeks ago on this channel are probably a little bit low. So, maybe the, earnings per share will be closer to, I don't know, $2.50, somewhere in that range. But maybe we'll have to revisit it once we get the final delivery number. But I think there's just so much good news coming right now.
Yeah. What was it, 2 or 3 weeks ago, the episode where we, if anyone wants to watch it on the channel, we put it on as a special, like 30-minute spliced segment where we go over and screen share your actual Excel spreadsheet model and play with the inputs a little bit to get the earnings per share and such. And I think when I played with the inputs, I was around 285,000 deliveries, which seemed bullish at that time. So it was like everyone was thinking 260,000, 265,000. And we plugged in my numbers into your inputs fields, and it came out to $2.96 per share. So that'd be amazing. If it gets to $3 a share, that'd be really incredible. So I don't think that's out of the question. I don't think it's out of the question. So
yeah, it seems more likely now than it seemed to me, 2 or 3 weeks ago. Like, I thought you were a little bit on the, overly aggressive side, but now I'm like, I was probably a little too cautious. So we'll have to fine tune this in the next couple of weeks, and we'll revisit it, I think.
Yeah, $3 a share. Then you got like at a $1,200 share price. If it get, that's a $12 a year. That's 100 PE at that time. If it's not grow, $100 present time for that. If that quarter is represented for the whole year, but it's going to keep growing substantially. So, now you're getting to value stock territory. You can see it as a value stock. If it stayed at $1,200 a share for 2 years, it would be like a value stock, suddenly, but growing 50% per year still. So it's insane. So it's cool. So, anyway, end of 2021. What are your closing thoughts, Matt? I mean, we're about at the new year here. Any closing thoughts before we go into Q&A, I guess?
Yeah, it's been probably a wild ride as expected. I mean, lots of ups and downs. I mean, Tesla has probably nothing can beat 2020 in terms of just like the rocket ship of the stock and like, just crazy Tesla news left and right. And Elon was kind of in rare form that whole year. This has been slightly more mild, but there's still been I think big surprises. We've had $150 stock movement days this year, and just big surprises, up and down. But overall, I'm just grateful to have been able to join you here at Good Soil. I think the fund's had a really great first year with outside investors. We'll have final results for the year in a week or two. But clearly happy given kind of the broader market of how we've performed and of what we're just starting to build here. So it feels like the beginning stages still of something that I'm hoping can be much bigger, and maybe that sentiment echoes with just Tesla in general. And even the rest of our stocks. I mean, it seems like there's so much rapid pace of technological change that the market still doesn't really recognize, and especially when I just go and talk to normal people in my everyday life, like nobody else is really kind of thinking or seeing things, in a manner that is kind of like predicting big disruptive technology, radically changing, the economic landscape. So the fact that there still seems to be this widespread, I would say, ignorance of some potential changes, and I don't mean to say that in like an arrogant way, but it leaves open the possibility, I think, that similar to the way Tesla was, all of a sudden people recognize what Tesla truly was. I think the same thing will happen across a broader swath of truly disruptive stocks. And so I'm excited about that potential.
Yeah, me too. I'm excited. 2021 was, from a Tesla perspective, not as exciting as 2020. I don't think anything will ever be from a Tesla stock perspective, at least. But I think, overall, I'm very happy with the business progress of Tesla, the product, announcement of the Tesla bot. I'm super excited about, and the gigafactories are about to come online, and I'm really excited for the future of what the business is going to do, and ultimately that means the stock will do very well. But as we've talked about before, stock prices and businesses in the business can be can seem very disconnected for a long time sometimes, especially in the largest growth stocks. So we'll see when the stock kind of reacts strongly. I think this year the stock is up like 30 or 40% on the year, depending on what from January 1st to now or whatever, which is great. But the business is so much has in my mind, I feel like improved so much more than 30-40% from that then till now, the business outlook at least. So we'll see what goes on with the stock, and as far as good soil, I'm very excited about the start we have, and what we're doing here, trying to open source our research on our channel, and with everyone who follows us and is interested to follow and see what we're talking about or thinking about. And we get lots of feedback from everyone who does follow us. We read as many questions as we can and get lots of interesting ideas from people, our investors, and also people who just follow us and are curious about what we're involved with. And I think I'm excited for the stage has been set for more of a charitable component, hopefully going forward, that we can involve our audience in further, and people we even interview in further on. So I'm excited. Yeah, I mean, I think 2021, I'm very grateful for it in all aspects. And I'm, like you said, Matt, I think people are not anticipating the future rate of change that's going to happen with technology. And investing should be about the future. It's not about the past, right? And so I think when I think of investing, I automatically go to the future. What's the next few years look like? And I don't think a lot of people have a very good understanding of the next few years rate of technology change that's happening. So that's sort of where we think our edge comes in, and folks like ARK Invest as well have that edge, I think, too. So yeah, we'll see. Let's take some questions here for the next 20 minutes or so, and try to get through as many as we can. Matt, do you want to read some off, I guess, if you get a chance?
Yeah, sure. All right. So Cholo Miranda says, just wondering how you guys are hedging inflation risk / interest rate hikes next year. Tom Nash has been warning people that next year inflation will become clear. Fed will accelerate rate hikes. What are your thoughts on that?
Yeah, I know Tom Nash I haven't listened to him, but a lot of people reference him. I need to listen to him to kind of understand, to get a feel for how accurate I think his perspectives are, I guess, or not how accurate, but just how meaningful I think they are. But for us personally, we see inflation risk and interest rate hikes sort of priced in to some degree. And I think inflation is going to be a headline in financial media for much of the next few quarters, as long as there's some kind of metric they can reference to show, hey, inflation's getting out of control. See this metric, then you'll see headlines on that. And it doesn't necessarily mean inflation is out of control, but if you can take any kind of metric, even if it's out of context, and create panic in the minds of people so that they click on it, that's going to happen. And so I think inflation is going to be the big story that's going to go on in financial media. Whether or not it's really happening to the extent of the headlines suggest it's happening is another thing to decipher, whether that's how much noise is there versus signal. So we'll continue to keep a close eye on it. But yeah, I mean, there's always risk of more inflation than what's priced in, or more interest rate hikes than what's priced in. I don't know, Matt, you have any thoughts?
Yeah, I mean, we've talked about this, I think, on several of these live streams. I mean, my thinking is it's going to be very hard to really accelerate rate hikes too much, given the kind of debt load that the country has right now. I mean, if they start hiking rates too much, the debt service will become untenable, really quickly, and then you've got to print more debt to service the debt, and then it's just like a vicious cycle. So I think for that reason, there's going to be something of a cap that you won't see rates at 8%, say, because that would just be crushing to the economy and to the federal budget, to be servicing debt at that much. So I think if there's a choice between letting inflation run and letting rates hike, I think they'll choose to kind of let inflation run a little bit, and that won't be great, obviously, but I think it'll be manageable. I mean, I don't think we're going to have 15-20% yearly inflation for many years, and I think there are companies like Tesla who will benefit from that. I mean, it may cause some short-term pressure on the stock. I mean, obviously for your valuation methodologies, technically that should result in a increase in your discount rate, which will lower the implied value of the stock. But at the same time, if you just look at the operations of the company, I think Tesla will be able to handle inflationary pressures a lot better than, say, Ford or GM, or anyone who is building internal combustion engine vehicles and doesn't have a Wright's law sort of deflationary pressure on their highest single cost item, which is the powertrain. So you're going to have deflationary pressure on a lot of the companies that we deal with, whether it's software like Roblox, which is not super prone to inflation, or Rocket Lab, which is really trying to reduce cost of access to space. A lot of the companies that we play with have deflationary trends, which will hold up relatively well in an inflationary macro environment. So that's kind of my thought.
I agree. Yeah.
All right. Dave Wolf asks, how do you, if you do, figure China Evergrande into risk for, say, Tesla? Any concerns about China nationalizing some of the EV supply chain that might affect Tesla China factory?
I do think there is kind of like a overall market sentiment tied to this Evergrande stuff, and part of in China and views on China related exposure stocks. And Tesla certainly has Chinese exposure in China. So I think there is sort of a sentiment sensitivity there with the Evergrande risks. So we'll see how long that goes on. I know that Evergrande story's kind of been playing out still, and there's some other potential issues with debt in China related to real estate, I think, and loans. So hopefully it's not a huge domino effect that creates even more sentiment negativity towards any stocks exposed to China, and Chinese investors then too also are going to lose, and some of those Chinese investors might somehow have ties to investing in Tesla that they have to close out of. So there is for Tesla there. I just don't know how deep that exposure really is. I can't see it being more than a 10 or 20% drop in Tesla, worst case, absolute worst case, if but I don't think it'll be that much even. We'll see. Maybe some of it's already priced in to some degree. What do you think, Matt?
Yeah, I actually, so this was something I think Ray Dalio spoke about very eloquently on the Lex Fridman podcast, when he was basically saying, a lot of people hear about this massive bankruptcy related to a huge real estate bubble in China and say, oh gosh, the sky is falling, it's going to be catastrophic. And Ray's point is, well, this is actually kind of healthy. You had a legitimate bubble that got out of hand, and now the debt is going to default, and it's kind of a way of the market regulating itself to an extent. So it's a helpful when that sort of thing happens, because it precludes further misplacement of capital assets into unproductive real estate or whatever the asset is. So he I think did a great job of kind of pointing out how this is healthy for markets to do sometime. It was at a very large scale, to be sure, but I think it didn't have a lot of the tie-ins with CDOs and a lot of the stuff that happened in the subprime market, in the United States, which was so like toxic and intertwined with the entire financial system, basically on the brink of collapse. It's not the same sort of situation right now. As it relates to the question about the China supply chain, it was actually just this week, I think, China that they're bringing down the foreign ownership rules for manufacturing EVs in China. So I think now actually more companies can follow in Tesla's footsteps and actually own factories outright in China. So to me, that signals
It's a big deal.
a bit of a, yeah, exactly. It's a good sign, I think, that we've seen a lot of kind of clamping down in the last 3, 4, 5 months from China within certain industries. Like we saw this in video gaming, but in other areas they're opening up. And so I think from a U.S. perspective, it's very easy to kind of villainize China and say, oh, like they're just clamping down and authoritarian or whatever. But I think that the actual policies that they're trying to pursue are more nuanced. And I don't think there's as large of a catastrophic risk in an industry like EVs, where they're trying to attract foreign investment and innovation and really trying to pursue a national objective by strengthening this industry. So I think they'll do well. All right. Next question. Ben Trey says, Rocket Lab seems to have the advantage versus SpaceX in additive manufacturing and low-cost launch infrastructure. I guess it's not much of a question, but what's your thought on kind of comparing Rocket Lab's manufacturing processes compared to SpaceX?
Yeah, I mean, I haven't seen the tour of Rocket Lab's manufacturing. I'm not an expert on that stuff. I mean, it's something that I feel like the guy, everyday astronaut Tim from there, or Scott Manley, might be more informed on discussing. I like to see kind of the results, and I want to see the Neutron get to launch and see how effectively or quickly they build it and how much they can launch it, and if they can do everything they say they can. That's sort of, and then the types of customers that sign up for Neutron with Rocket Lab. SpaceX, everyone already anoints them sort of the king of the space industry, and that's true. They are. And I'm not saying we don't think Rocket Lab is going to take over that role. We don't think they're going to become the king or compete even eye to eye with SpaceX. But we do think they'll be a second place to SpaceX, and a clear second place. And that's what I want to see. And for Rocket Lab to be successful, that's all we really feel that needs to happen. I mean, it's a $5 or $6 billion market cap company, and SpaceX is valued at $100 billion on the private markets. So a clear second place to a company valued at hundreds of billions. You'd think it'd have a substantially higher market cap than 5 or 6 billion, right? So in the medium to long term, that's kind of our thesis on Rocket Lab overall. We try to dive into the details as much as we can, but we're not rocket scientists ourselves. We just kind of want to make sure the business is good enough to keep running and stay in second place, a clear second place for this kind of industry. And if so, we think that eventually, if you build it, they will come, so to speak, with the investors coming on board with Rocket Lab. What do you think, Matt?
Yeah, I think so too. I mean, it's very clear, like SpaceX is not going to have 100% of all of the space industry into perpetuity. That's clearly not going to happen. I mean, they're absolutely the clear leader. But I think one of the things Peter Beck has done a good job of is kind of tying the market-based mindset in with kind of the technical capabilities of the spacecraft that they're developing. So, while SpaceX is very much going to be focused on colonizing Mars, and you need, high mass to orbit, like Elon was saying in these tweets recently, in order to achieve that objective, that creates opportunities for a little bit more nimble providers who can be the low-cost provider to people who need a very specific launch and a very targeted trajectory orbit. So I think they'll do really well. I mean, I think people don't give enough credit to Rocket Lab for the low-cost manufacturing technologies that they've developed and are continuing to kind of add on. I mean, they're doing a lot of the 3D printing of engines and sort of stuff that we typically think of only SpaceX doing. They've learned a lot, and I think they're probably the leaders in carbon fiber. Nobody else is really doing it the way that they are. So I think they'll do really well and are incredibly innovative. But yeah, we'll see.
We'll see. Yeah.
All right, maybe we can do one or two more questions here.
Okay.
So Johnny Liu asks, Rocket Lab is valued at 5.3 billion with 50 to 60 million of revenue this year and around $100 million next year. Cost per launch is increasing with negative cash flow. Is this richly valued, especially with high interest rates going up?
I mean, I think Rocket Lab we see as, second place in a very fast growing industry. That's going to be a very important part of the economy as the decade goes on. So, if you just think in today's terms and past terms, it seems, this kind of question makes sense, right? But we got to think about the future and the future of investing in the next few years, what it's going to look like. Where are we going? How big is space going to get? What kind of options are there within Rocket Lab for space? They're doing an end-to-end solution. They're buying these companies right now, not for nothing, right? The companies they're buying right now are to become more of an end-to-end provider for all kinds of space services. So it's not just launching. So I think that's going to become more clear 2 years from now, for example. So right now it's hard to see, the forest from the trees and this stuff. You're just looking at like, okay, this, the stats on this question sort of makes sense. Say, oh, it's kind of risky, kind of expensive. But you really have to think about how fast that industry is changing and growing. And there's just uncertainty in it, right? But there's positive uncertainty in my mind of like lots of positive call options, so to speak, with like new ways to make money in the space industry and how much more popular it's going to become and how big of a part Rocket Lab will play in that. So we're keeping a close eye on all the space, industry companies to see, okay, is there some other company that's going to be second place to SpaceX that we have to be, that's going to take over Rocket Lab as like Rocket Lab's trying to do. And maybe if that happened, we'd be worried and think about things. But based on what we're surveying, it doesn't seem like that at this time. I mean, they're the only other company sending things into low Earth orbit consistently. So, and that seems to be the hardest piece of the puzzle to really conquer. That's why there's hardly anyone doing that. So I don't know. What do you think, Matt?
Yeah, I mean, it's like if you are, this is why I think it's a lot into the trap of kind of looking at like historic balance sheet and income statement metrics and saying, well, they must be overvalued if they're trading at 50 times revenue. But I think you need to the more difficult thing to do and the more uncertain thing to do is to look out 5-10 years and say, okay, how will their technology allow them to compete in the market of 2025, let's say, or 2027? And how big will the let's say the launch industry be by then? And then what are their other kind of avenues for growth outside of their core business? And so when we do that exercise, Emmet, you and I have talked about that quite a bit of, okay, what's next after, just kind of low Earth orbit launches, because that's a somewhat limited market. And that's when I get really excited is kind of seeing like all the different opportunities for, like Earth-based services provided by constellations that could be owned and operated by Rocket Lab. So, yeah, of course, if they didn't have much growth potential and, would only do, say, 10 launches a year, I would say don't buy the stock at, $5.3 billion. But you've got to look around the corner and say, okay, what's it going to look like in 5 years? And we put together a model, and I forget the exact number, but, we brought down, I think, the revenue, the enterprise value to revenue multiple a little bit in that model, and we're coming up with a share price of around $30. So we think that there's enough room to kind of grow that, the operations will continue to justify, pretty steep share price increases from here. I know you've got to get going pretty soon, Emmet, but maybe we can just
do one more. Yeah,
one
let's do one more question.
Okay. All right. So XYZ2207 says, what is your opinion on new age fintech such as SoFi, AFRM, and UPSD Upstart?
Overvalued. I think if there's something I've been a bear on for a long time is Robinhood, this stock, for example, and I think that's just a good proxy for so much of the new age fintech. You know, so many people are so excited about these things. You know, I've talked to some people that I seem to be really smart, and I really respect them, and they're very positive on Upstart and Affirm and Robinhood, and I just can't see it. I just think a lot of this fintech stuff is overvalued, and I think it's easily reproducible. Like once a fintech company makes a headway in something, that technology is now easily reproduced and becomes commoditized sooner than you think, you know, and it's not like they have some kind of moat, you know, like if you have a brokerage account with Robinhood and you got into brokerage trading because of Robinhood, right? At some point, you're going to become sophisticated enough to say, hey, these other companies are doing the same thing. I have to change my interface of what I use, but I can get a lower interest rate on my margin balance, or I can go to a company that has a balance sheet in case there's another market crash. You know, I don't have to worry about losing everything because the balance sheet of Robinhood is so poor, you know, or whatever it is. I just feel like there's not a huge advantage in many of the fintech companies that justify the valuations most of them receive. Um, you know, I think, you know, you involve crypto, and there's some, you know, there's something to crypto being a whole new kind of sub industry within fintech. So I'm trying to think about this outside of crypto. But when you involve crypto, then maybe there's some merit to some of this stuff, you know, whether it's Coinbase or FTX, you know, some of these will become major players in the crypto world. But I just don't see a lot of fintech as being anything like Affirm. I see as like credit cards 2.0. I don't see how they get the value, you know, they're getting, or they had gotten, you know, and Upstart, you know, similar. I just don't see the value. You know, people are buying it just because everyone else. I see them as bubbles personally. What do you think, Matt?
Yeah, I agree. I mean, I think there's maybe 2 points that I think are really important that people need to think through if they're going to be investing in these companies. Um, First, just is the total addressable market increasing or decreasing? So, like the total quantity of people that are, say, needing a loan or using some sort of revolving credit, like a firm offers or like a credit card offers, like that's probably not going to be increasing more than, I don't know, 2, 3, 4, 5% a year. But the whole point of these is to do so more cheaply. So, cut the cost incurred by the end customer. Then your total addressable market is going to be shrinking because you're multiplying that, let's say 2% volume growth by say 50% cut in price. So you've got like like a race to the bottom of these companies that are trying to shrink the total addressable market by lowering cost. And they've got these like crazy valuations that reflect just massive growth, when that's not really going to be possible unless like it's just not possible if you do the math of like adding up like the total market for all these different lending offerings and multiplying it by like the prices, including the savings. It just doesn't really make any sense. And you're right, there's no moats, there's no like when I check out on random websites now, there's all these companies I've never heard of that do the exact same thing as Affirm and of Shift4 and of whatever the one that Square just bought was. So I don't think there's any really sort of big moat. And then the other thing I would say is I do. You mentioned crypto, and I think that's where there really could be some more like disruptive changes to fintech. I think that would take a lot more time to pan out. I mean, I don't think anyone's going to get like a mortgage on an Ethereum blockchain anytime soon. But at least the potential is there. So I'm more bullish on that because I think that actually would be kind of like a revolution in the way a lot of the banking is done, and in ways that is not necessarily capped in the same way I see like kind of caps on the total addressable market of companies like Affirm and Upstart and Shift4 and all that.
Yeah, no, I agree. Yeah, and so I just been noticing in the comments on the YouTube live channel, a lot of people talking about putting, for some reason, some weird side conversation started about putting mirrors on people's roofs to cool the earth down because it reflects the sunlight back out of that. Some of the waves come out of the atmosphere, some of it gets stuck in, but anyways, interesting dialogue I've noticed. I'll have to dive into later and figure that out if that's.
I think it probably would be. better to have solar panels where you absorb that energy and use the energy
Yeah.
for something productive here on Earth.
Well, there's like 3 or 4 guys going back and forth on the YouTube chat. It's funny. I just saw a couple of comments. I missed most of it, but I'll have to look at that later. That's interesting. All right. Well, that was a weird side note to end on. Anyway,
We'll invest in some mirror manufacturer.
yeah,
That'll be the
who
next.
knows? Yeah. So we'll see everyone next week, same time, same place, and hopefully this will start the new year off well with some good delivery numbers by that time. I think we should have the delivery numbers by that time, so
Yeah.
we'll be talking about that a lot, I'm ure. So maybe we'll replug them into your model next week and go over it.
That'd be great. Thanks for
Cool.
watching, everyone. Enjoy
All right.
the rest of your vacation, Emmett, and we'll talk soon.
Thanks.